UK lenders, led by HSBC Holdings Plc, are removing mortgage deals from the market again as they prepare to reprice home loans to account for inflation. Given only hours notice, HSBC told brokers on Thursday that it remove all its current new business residential and buy-to-let products the same evening. It said the offering is controlled or incantist in this last year, and it's not, and many people get steps into supported, safe, I'm taking included, safety and the number of home loan products available in the UK was 5,056 on Friday. According to data company Moneyfacts Group PLC, that's about 4% lower than at the start of May, but the highest daily amount this month, suggesting some lenders may be putting deals back on the market at higher rates. It's the latest blow to cash-strapped homeowners who are already grappling with higher borrowing costs and a possible drop in house prices. Households are cutting down other expenses to cover higher loan repayments, while many prospective buyers are avoiding the mortgage market altogether. Particularly each time it becomes clear that the Bank of England will soon hike rates, the cheapest lender on the high street gets overwhelmed, saying to Boodia, partner at night, and that was urgent. And Frank Finance, much is going to depend on the next CPI reading due later this month. The average 2-year fixed rate mortgage on a home rose to 5.83% on Friday, the highest since December, after a high inflation reading last month prompted money markets to better that the BOE will keep raising rates through this summer. Meanwhile, the average 5-year fixed rate deal remained just below 5.5. Andrew Montlake, managing director at mortgage broker Corco, said it was inevitable mortgage costs will rise after inflation. Numbers pushed up swap rates. I'm praying the worst is over, he said. Ray Bolger, a manager at loan broker John Charcoal, said the mortgage deals at higher rates would impact property prices. The hit of confidence is likely to weigh on house prices in the second half of the year as the pool of buyers shrinks, while an increasing group of homeowners, even if we believe it to be relatively limited compared to past crises, may decide to sell their home amid surging mortgage repayments. I'm Will Havenko, equity research analyst. The average 2-year fixed rate mortgage across the nation's 6 biggest lenders, which includes HSBC, Lloyds Banking Group PPS, and Nationwide Building Society, has surged about 5% again since the start of June, according to price comparison website Uswitch. And that's a concern for tens of thousands of UK households that are on 2-year fixed rate mortgages, which are due to expire in September. Thank you very much. Though the UK inflation rate fell back into single digits in April, it continues to outpace wage growth. Potential buyers are finding it even harder to afford the cost of repaying a home loan, contributing to net mortgage lending falling to virtually zero in March, according to BOE data. At least one more mortgage lender is likely to pull its rates on Friday, John Charcoal's Boulder said. It was obvious mortgage rates were going to have to go up. I'm just surprised it's taken so long, Boulder said. It's going to knock people's confidence and they won't be able to get as big a loan.